So ladies and gents, it's now 12:30, so it's a perfect time to start this afternoon's talk. And this afternoon's webinar is entitled Credit Scores Explained, where we look at all things to do with your credit score. Now, let me just introduce myself so you know who's speaking today. So my name is Greg March, and I'm a Senior Financial Educational Coach for My Money Matters. And I've got the pleasure of taking you through the next 15, 20 minutes or so, demystifying what is our credit score. But just before we get into the webinar itself, let me just give you a couple of pointers. First and foremost, that this information I'm about to give you today should not be taken as regulated financial advice. It's been designed purely for educational purposes only. And also, when we do talk about your credit score, we cannot advise you if you're experiencing debt difficulty. So unfortunately for that, I'm afraid. And also, please be aware that these webinars are recorded for training and compliance purposes as well. Now, if you've got any questions during today's talk, then feel free to ask those questions. And the format for asking questions today is by using a Q&A box that you can see on the right-hand side of your screen. So if you have a question, keep it to a generic basis if you can. Drop it into the Q&A box. And what I'll do, I'll answer that question for you at the end of the talk. What I would say is there is roughly a 20-second delay between what I'm saying and what you're hearing. So get those questions in bright and early if you can, especially as this is quite a short presentation. Now, just so you're aware what we can offer with you at My Money Matters, we offer education that covers all different scenarios. So today we're on education that looks at debt and money management, but we also have different sections of education that you may find of benefit, such as savings and investments, estate planning, insurance and protection, and also retirement. So if you go back onto our platform, you will see there's lots of different forms of webinars available for all of you. Currently, under the debt and money management webinars, we've got mortgages, the credit score webinars that you're on there for today, and also we've got debt handling as well. With the savings and investments, we've got a box set of webinars that talks about the journey from setting financial goals to understanding how to budget, and then all the way through to actually understanding how to save, how to invest, and the taxation that goes with it. And they're quite a popular series of webinars. For estate planning, we have everything to do with your estate. So it could be what's the importance of establishing a will, what happens with inheritance tax in the event of death, and the gifting you can make. We also have content that looks at long-term care and even things like funeral plans and the lasting power of attorney. In addition to that, we can give you assistance on understanding insurances. So what type of insurances are available in the workplace that could assist you if you were to, let's say, lose your job and you need income replacement? What types of insurances are in the high street when it comes to things like protecting your mortgages and so on? In addition to that, we also have quite a very useful webinar on how you can save money when it comes to things like car insurance as well. As you've probably seen in the last year or two, car insurance has literally gone through the roof when it comes to the costs. And we can talk about how you can maybe bring that price down just a little bit. And then, as you'd expect from My Money Matters, as we used to trade under AVCWise, we've got a whole plethora of content on the need to plan for retirement. So that's anything to do with the physical local government pension scheme, and it's also to do with the salary sacrifice share cost ABCs. So if you haven't been on those webinars, I'd highly recommend that you take a look at some point and start that journey for today. Now, talking about today, what are we going to cover in the next 15 minutes or so? Well, the first thing we're going to look at is actually talk about your credit score. So ask the question about what is a credit score and what are the agencies that are available for you in the UK. We'll also talk about why the credit score is so important, and a lot of people don't realise the importance of a credit score. We hear about this thing all the time, but we don't really understand what it's for. And then I want to talk about what can have a negative impact on your credit score, and on the reverse side, what can have a positive impact as well. And there's one thing I would say to all of you, whether you understand a credit score or not, I would highly recommend that you get into the routine of actually looking at your credit score, because not only can it assist you with things like loans and debts later on, but it also allows you to see if you have been a victim of fraud online, because this is more of a common trend today than ever before. And you may find that by looking at your credit score, there are certain transactions that you can see that wasn't from you. So get used to understanding your credit score. So it's a really useful tool all around for everything to do with the finances. So let's pose this question then: what is a credit score? Well, all a credit score is in reality is just a numeric representation of how creditworthy we are. So it's just a way in which organisations can see what type of risk that we are when it comes to the ability to repay debt. And lenders will actually use this score to evaluate that risk. So it's just a number, that's all it is, that represents how good we are at paying off debt, how good we are as a potential client going forward, and what risk we pose to the credit agency themselves. Now, in the UK, there is no standard scale for this numerical number. Different companies have different levels. So just be aware there isn't a standard scale. So you could have a credit number with one organisation, but then you look at a different organisation and that number could be totally different. And we'll cover those numbers with you in just a moment. Now, when we're looking at the credit agencies in the UK, these are the main organisations you'll get access to. So you've got an organisation called ClearScore. There's an organisation called Credit Karma. There's another one that you've probably all heard of before called Experian. And then you've also got an organisation called Check My File. So these are the main organisations we've got in the UK. And you can have as many credit score companies as you wish. So I've got personally Credit Score. I've also got Credit Karma as well. So I've got ClearScore, sorry, and Credit Karma. So you can have as many of these agencies as you actually need. And what they actually do when they look at your credit worthiness, when these credit companies have a look at you, they look at different areas of your finances. Now, the first thing they can look at is the public records, and they'll check to see that you've been enrolled on the electoral register. That then just shows proof of residency for yourself. But at the same time, they're also going to check on the public records for previous insolvency. So if you've ever been made bankrupt or you've had things like county court judgments against you. So they're going to look at the longevity of where you've been in a property, and they're also going to look as well at previous debt records, should we say, so insolvencies, county court judgments, and bankruptcies going forward. By looking at the public register, they do look at the address record. So the longer you've been established, then that does actually help with your credit score. So if you are in a situation where unfortunately you're moving from one place to another place on a regular basis, that could impact the credit score. But if you're able to settle down and you've got a place for a period of time, that can actually improve your credit score. The other thing that they put into the report as well is your financial history. So what the companies are looking for is the history you've got, be it on a negative side or a positive side. They'll take that into account. And they're also going to look for shared accounts as well. So if you do have shared accounts and one of those individuals is in a situation where they struggling and brings that account down, that could have an impact again upon your credit score. And they're also going to look for credit applications as well. So when you're doing an application for a credit or any form of credit, then that will be the kind of a hard search on your report, and we'll talk about that in just a moment. So when you're looking at your credit report, they look at public records, your address records, the financial history you got on a positive and negative basis, and all of those credit applications. Now, even though the UK doesn't have a standard when it comes to the credit scoring system, the US, the Americas, they do. And what I thought it was viable for you to look at is just having a look at how the United States credit score works, so you can see what part those different subsections you just discussed will actually form part of your role. So over in America, they have this system called a FICO score, F-I-C-O. And what they do is they look at your finances, and 30% of any money that you owe will go towards your credit score in the United States. Applications for new credits will account for 10% of your credit score. The length you've got, so the history you've got, will account for 15% of your credit score. The mix that you've got, so the different cards, is 10%. And payment history takes up the biggest percentage of your credit score with 35%. Now, I know this is not applicable to the United Kingdom, but it does give you some idea of how the credit score is actually built up. And in reality, if you're struggling with a bad credit score, you can see that by maybe making longer payment history, that could actually improve your score the most. So it's just important that you understand how this works. So the FICO system is a standard system for the US. We don't have one in the UK, but I would say we're not that dissimilar to how our credit score actually is made up. Now, in the UK, there are 3 main credit reference agencies, and they have different numbers, different numerical numbers relating to each of those. So let me just take you through these so you can see the different numbers that are available for you in the UK. So one of the credit agencies we have in the UK is a company called TransUnion, and they have a scoring system 0, which is going to be very, very poor, to 710, which is going to be excellent. So what you can see on the screen now is their scoring system. So let's say you've got a good credit score because you have a credit number, a numerical number between 604 and 627. So TransUnion offer the scoring system of 0 to 710. And as you see, when we progress through the rest of this slide deck, other companies will have different scoring systems. So it's important you understand that the number you've got is only really relevant to the credit reference agency itself. Now, this system is actually used by Check My File and also by Credit Karma. So they will use the TransUnion system when they're looking at creating a score for yourself. One of the other agencies is Experian, so the better known agencies in the UK, and their scoring system is 0 to 999. So TransUnion to 710, Experian to 999. And again, when you look at their system, you're good if you've got a score of 881, which is totally different to TransUnion. So just, again, be aware of the differences going forward. And this is used by Check My File. So Check My File will use this report plus the TransUnion one as well. And then we also have Equifax, again, one of the big players in the marketplace, but again, with a different numerical range. Instead of being from 0 to 999, this one's from 0 to 1,000. And again, if we look at the good score for this particular one, the numerical range is totally different. So it's 531 to 670. And when you look at Equifax, then this again is used by ClearScore and Check My File. So you can probably see that Check My File, as a way of getting your credit score, uses the 3 separate credit reference agencies to compile your file. So what I'm trying to get across with this one is that there are different credit reference agencies within the UK, and they all have a totally different credit scoring system. So it's important that you understand that if I said to you my number was 500, that doesn't mean anything if you're with a different agency. So just be aware with that. And the reason that the credit score is important for all of us to understand, as I mentioned at the beginning of this particular webinar, is it's really useful that we keep a track of our credit reference and our credit score, because it can help us with things like applying for loans. It can also help us with things like making sure we're not victims of online fraud. And it's really important you understand that. Now, the reason that you can access your credit score is the UK's Consumer Credit Report in 1974 stated that a consumer, because of those issues, has a right to know what their credit score is. And more importantly, they have a right to access their credit score without having to pay for that information. So when you're looking at these different companies that offer the credit scores for ourselves, then they have to offer you some form of free access. So Check My File, that gives you a 30-day free trial. And remember, that one is used by all of the agencies. So this one looks at all of the agencies that we've discussed so far. Credit Karma offers you a free credit score. So you can go into Credit Karma and your credit score will be free for you to look at any given stage. And they update their records on a weekly basis. And Experian, again, offer you a free one. But the differences between Experian and Credit Karma is that Experian update their history on a 30-day basis. And then you've got ClearScore, which again offers you the free option, and that's updated weekly. So when you're looking at the screen, if you're in the situation that you're paying for your credit score for whatever reason, just be aware that you can get access to your credit score completely free of charge. And you might decide to have one credit score company, or you might decide to have the 2, or even 3. It's up to you. You can have as many credit scores as you wish. But just get yourself into that routine, though. If you do choose a specific company, maybe once or twice every month, just pop onto it, just have a look at your score. They do send emails out to you all the time if your score has changed, or if you've had what they call a hard search. And a hard search is where you're applying for some form of credit somewhere. They do generically ping you just to tell you that search has taken place upon your records. But just to be safe, make sure you check your credit history on a regular basis. And what the credit score actually does, it actually reflects your likelihood of being able to be accepted for financial agreements. So if you're in the marketplace today for a mobile phone, well, you need to have some form of credit history. If you're looking to maybe replace the motor car, again, you need to have credit history, as you would do if you're looking to get yourself a mortgage or a remortgage. So it's really important that you understand that anything that you want to do with your finances going forward is dependent upon your credit history. So when looking at this in more detail, you also need to take into account that it can impact other things as well. And one of the things it can impact is actually, if you're applying for a loan, it can actually impact the amount of interest that's been charged to you. So when you're in the marketplace for a loan, what you'll generally be quoted is something called a typical APR. Now, what this actually stands for is the typical rate that's given to the typical person in the high street with a typical credit score. So it's a typical rate that's applied when it comes to your financial agreement. So if you're in a situation, let's be honest, that you have a really good credit score, well, you're not really then seen as typical. So what this means is that you can actually go to your provider and say, listen, I see myself as being the top echelons when it comes to credit scores, because they do tell you what your, not in brackets, not your neighbours, what the area is like for credit scores. And if you see yourself as quite a good credit score on that top echelon, you could go back to your provider and state that you've offered me a typical APR, but because my credit score is a certain level, what I'd like to do is have a better rate of interest. So I'm paying a lower rate of interest. So just be aware that by understanding your credit score, you could go to your providers and request a better rate of interest when it comes to anything that you're actually borrowing. On the reverse side, though, if you've got a poor credit score, then what they could do is when you're applying for a loan, if they accept you, is they could actually charge you a higher interest rate. So just be aware of that one. And if you're aware that you've got a poor credit score and you're about to apply for a loan, you could do certain things to improve your credit score. So understanding the credit score is important. It prevents things like fraud, but it also potentially allows you to get better rates as well going forward. Now, when we're talking about APR, then, or percentage rate, and we're talking about interest, just be aware there is a difference between the two when you're applying for credit. So if you apply for credit today and you get offered an interest rate, well, all this simply is the headline rate of the loan that you're applying for. So I could offer you a loan today with an interest rate of 5%. That's not going to cover all of the charges and all of the costs that relate to that loan. So what you need to be looking at when you're applying for a loan is you need to be looking at the APR rate. And what the APR rate actually does, it gives you the interest rate of the loan plus all of the associated charges. So it's important, again, that you understand that going forward. So your credit score can, if you've got a good credit score, improve the typical APR rate that's been applied to you. But on the reverse side, though, if you've got a poor credit score, then that could actually mean that the cost of that debt is going to be a little bit more for you. So you need to be proactive with your credit score going forward. And what I want to show you now is what can give you a negative impact upon your credit score. So if you've got a poor credit score, you're not too sure why, you might be doing one or two of these things. The first thing is you might be setting up new accounts on a frequent basis. So you might be jumping from one bank account to another bank account. And the reason that's going to give you a negative impact on your credit score is that you haven't got that longevity. So if you are changing your bank accounts on a regular basis, because we get incentivized to do so now, because certain banks will give you X amount of money if you sign up for them. If we do that on a regular basis, be aware that could impact your credit score on a negative basis. As you'd expect, if you've got a lack of funds in your account for a prolonged period of time, when the credit agencies look at those accounts and they see you don't have the funds, the longer we don't have those funds in the account, then potentially the worse our credit score's going to be. And if you're in a situation that you're not that organised when it comes to your finances and you do miss one or two payments, again, just remember that is going to impact your credit score. So you might want to start setting things up on direct debits or having lists of when those payments are due. And I'll show you an app later on that can actually help you with that going forward. And believe it or not, if you don't have enough credit history, this is going to impact you as well. So if you're in the situation that you've never had a loan, never had a credit card, never had a mobile phone, or haven't yet put that in your own name, so maybe your younger generation where parents are still funding that for you, that's going to impact your credit because you haven't proven that you can pay those debts on a regular basis. So by not having any form of credit card or loan or mobile phone can reduce your credit score. And that's why it's important that you understand that. And therefore, if you want to go forward and maybe try to start to create that credit history in your own name. And one of the things that a lot of people aren't aware of is when we've got a payment card, let's say a credit card, and we make the payment on the last working day for that particular payment, that's going to impact the credit score as well. Because what the agencies will look at is that this payment's been made every single time on the last day, therefore they must be struggling with finances. So try to get yourself in a routine where you make those payments before. And also, if you do have credit limits and you get too close to the ceiling of that limit, that'll be a negative impact upon your credit score. So therefore, if you've got a credit card today, let's just say, for argument's sake, with a maximum balance of £1,000 and you're constantly around the £900 what they're going to see is the fact that you're needing to use that on a regular basis, and because of that, it's going to decrease your credit score. So just be aware of what has a negative impact. But then on the reverse side, let's see what happens and how we can improve our credit score, which is important, I think, for a lot of us. So the first rule of thumb of improving your credit score is only borrow what you can actually afford. So a lot of companies will say to you, we'll let you have if you want X amount of loans. Well, if you don't need them, don't go for them. Only borrow what you can afford and what you can afford to pay on a regular basis. Also, one thing that a lot of people aren't that aware of, if you do have a series of, let's say, credit cards, try to keep one that you've had the longest. So if you've got 3 or 4 credit cards and you're thinking, do you know what, I don't really want all of this debt, rather than cancelling every single one of them, maybe just keep one that you've had the longest, and that will go towards the age of your credit history. So by having a credit card that you've had for, let's say, 5, 10, 15 years, that's going to actually improve your credit history. And if you have maybe utilized it once or twice just to maintain that account, pay the thing off straight away, and that'll improve your credit history. Another way you can improve your credit history, if you've got credit cards and you're paying those payments on a regular basis, do it by direct debit. And this will then just ensure you never miss a payment. And again, it will show you've got the history going forward. If you're really struggling with a credit history as well, there is one way around the way in which you can actually improve it, and it's something called a revolving account. So what a revolving account is, do you know when you pop into your local, I don't know, clothing store or whatever, and they say, why not take an account with us, we'll give you a 20% discount on what you're about to purchase. They're not bad things to have if you're in a situation where you can keep paying that payment. So you get the card, you get the discount, but you pay it off on a regular basis. That then is going to improve your credit history. So those revolving accounts, those store accounts, as long as you're paying it on a regular basis, will improve your credit history. And you know, we said before that if you leave your payment until the last day before you pay it, it's going to have a negative impact upon your credit history. Well, the reverse side is if you pay your payment that's due on your credit card before that, so a minimum 3 days before that, that's going to improve your credit history, because what the agencies will look at is that this individual doesn't necessarily need to wait until the last day to fund that payment. So it's a good rule of thumb as well to improve your credit history. And then finally, on this one, what we need to be looking at is keep your balance as low as possible. So if you've got a limit for credit history of, let's say, £1,000, so you've got a credit card with £1,000 ability for you to spend on there, try to keep your payment or the credit on that one between 0 and 30%. So anywhere between nothing to £330 odd, because if you keep it to that limit, the credit history, the credit companies will look at your history and say, well, he's not using the balance, or she's not using the balance, and therefore they're a good risk. So these are things that we need to take account of. So the credit score itself is very important that we all understand. Be aware there is no central agency like we have in America that looks at the credit score, so there are different numbers. So your number is only really relevant to the organization that you're with. So if you see yourself as a good credit history from those different organizations we looked at, they're all different scores. Your history is important, and it's also important to create a history with a credit score, and that can help you when you're going and applying for loans. You can even bring down the cost of those loans if you do have a good score. So what you need to do from now on is make sure you're checking your credit history. So Equifax, you go to equifax.co.uk, Credit Karma.co.uk, so look at those. We've got to check my file, and also ClearScore. So these are the main organizations out there. And remember, you don't need to pay for your credit score, because it should be offered to you free. But all of these companies do offer you the free credit score with slightly different updates on how often they update your credit history. Now, there is something else you might want to look at as well that relates to all of this information. Is again, it's Snoop. And if you've been onto some of our webinars before, we do talk about this quite often. And the reason for that is that Snoop is an online application you can get on your mobile phone. And what Snoop allows you to do is manage your finances. So Snoop can tell you when your bills are due. It'll tell you whether they believe that your bill is coming up in the distance, if you've got enough credit to pay for that, and so on. So it's a really useful tool if you need a little bit of help when it comes to planning your own finances. And the way in which you can access Snoop is go onto our platform. look at the My Money Matters platform, go onto the Snoop tile that you'll see, and then it'll give you a QR code that takes you to the right application. There's no cost for Snoop, but it does allow you to help with things like budget planning and also just tracking your finances. So very useful thing indeed. You don't need to use Snoop, but it's just one of those things that could actually be an added tool in the basket, and it doesn't cost anything, so why not? So the next steps for all of you is understand that the credit score is important, but so is financial education. So we do offer that education that covers everything now from the birth to the grave, if that makes sense. So we look at things like mortgages, first-time mortgages, all the way around to inheritance tax planning at the end. So keep coming back to the platform, because there is a lot of information we're about to give you. It's free of charge, but it will make your financial well-being a little bit better. Now, just before we go to the questions, if you need to contact us, then please feel free to contact us in the normal way. So you've got access to our customer services department, and they are very knowledgeable and can help you on lots of things. But if you want to contact myself directly, or you've got some ideas for maybe content that you don't see on our platform, please drop me a note at the suggestions mailbox that you can see on the screen. So that's suggestions at my-money-matters.co.uk. So that's it for the credit score webinar. I'm just going to jump to a different screen to see if we've had any questions come through, and we don't have any questions at the current time. So let me just wrap this quick webinar up if I can. Your credit score is important, and it's important for a lot of different factors. But one of the biggest factors that we don't take into account is this increased aspect with online fraud. Just by checking your credit score on a regular basis, you can by default then see if you've ever been a victim of fraud, because if you look at your credit score and you see some hard searches that have been on that credit score through companies checking to see whether you're creditworthy and it's not you, then you can do something about it. And also by increasing and improving your credit score, by default, it's going to start decreasing the cost of your loans and debts going forward. So hopefully you found today's webinar of use. Any questions, feel free to contact me in the normal way, and enjoy the rest of your day. You take care. Bye-bye.